Shares of Liberty Media, meantime, Formula One, getting a boost following an upgrade to buy from neutral over at Citigroup. Investors seemingly growing more bearish on sports rights in general recently. But Citi says any concerns over the industry or the Las Vegas Grand Prix are overblown. Let's welcome in the analyst behind the call. That is Jason Bazinet. Jason, welcome. Good to see you. Let's take the concerns about the Las Vegas Grand Prix first. What are the worries there? I don't even know what the concerns are.
Well, I think the primary concern is that Liberty raised its capex in the Vegas property by a meaningful amount about a quarter ago that put a real crimp on free cash flow, and that cast a long shadow over sort of the intelligence of making that large investment. So that was sort of the first knock on the stock.
And then worry number two is that the sponsor of the events will not collect ultimately the kind of rights or TV rights money that has been piling into sports properties for decades now.
Yeah, that one really emanates from your parent company. They signed a deal with WWE for some linear television rights that really disappointed the street. And it rattled investors' cages because they had viewed sports as sort of the safe harbor in a pretty turbulent media ecosystem, and this just cast a long shadow over overall sports rights. We don't think that the disappointing WWE TV rights renewal is applicable to Formula One, and the reason is very simple. About 2/3 of WWE's TV rights come from the U.S. market,
right?
And it's only about 3% for Formula One. Formula One is just a much more global property.
So, yeah, Formula One is hugely popular globally, and people watch it. I think I can't remember where it falls in the ranking of sporting events, but it's up in the top 5, I believe. Is there room for, in your view, significant growth of viewership in the United States, or is that just a long shot?
No, I mean, the U.S. is the largest sort of media market in the world, and Formula One had been notably absent in the U.S. in terms of having a real following. Liberty's management team is making gradual but consistent inroads. I would say it started with Drive to Survive on Netflix. They're now up to 3 races in the United States: Austin, Miami, and now Vegas. And that's causing the U.S. audience to grow. And they're certainly not getting paid for the U.S. audience yet, but that's the long-term journey that we're on.
Yeah, I have a neighbor who's an Australian who gets up at odd hours to watch these events. He'll watch the Saudi Grand Prix or the Qatari Grand Prix or whatever it happens to be. So I don't underestimate the possible popularity of it. So you like the stock?
We do like the stock. It's interesting in that there was some press reports that Apple might come in and secure the global rights for Formula One and pay $2 billion for those. That would be about double what Formula One is collecting on a global basis today. By our math, if that's true, you'd see a quick sort of 10% lift in the share price. If it ends up not being true, I think that's totally fine. Our expectation is the value of Formula One sports rights will continue to rise about 8% a year. So either we're going to get some very, very positive news in the short term, or we just sort of grind higher. And there's one last thing that caused me to upgrade this stock is so much of this company's revenues are contractual that you really don't face any sort of macro slowdown, diminution in terms of their cash flows.
Interesting.